It's time for Ask Mike Mondays. Mike answers one listener's question every week. Here's Michael Becker and Paul Peebles.
Welcome to Ask Mike Mondays. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, the smartest guy in the room, Michael Becker.
Hey, Paul.
Michael, who owns over 4,000 apartment units. He has raised over $75 million in investor equity, $250 million in debt.
Yep.
The smartest guy in the room, at least I think he is.
Well, we'll see. Time will tell.
So first question up for Ask Mike Monday is from a listener that asks, Mike, when you are about to ask for the money, in the quotes, what's important when you're putting your investor pitch book together?
Yeah, when you're raising capital from investors, first and foremost thing you always got to keep in mind is how they're going to get their money back and what's the timeline. That's where it kind of all starts. So first and foremost, when you're putting a pitch together, just keep that in mind. Make sure that you have clear expectations of how you're going to go get their capital back, what the timeline is, and then kind of work backwards from there. So when you're pitching these people, you need to make sure that your debt either has a maturity that kind of lines up with your anticipated hold period, or at least have a flexible debt terms. Like we typically try to have 3 to 5 year term holds on our deals. We'll go out and take 10 or 12 year term debt out that is assumable and allow supplemental loans on them on the Fannie Mae loans. So we have flexible exit strategies with the type of debt that we put on it. So that's kind of first and foremost. Secondly is that's kind of the capital gain component. If you sell it or if you're going to hold it, what's the refinance likely going to look like? So make sure you have all those kind of stats, facts, and figures there as well. And then kind of along the line, when are you going to start returning cash flow back to your investors and then what amount? So really kind of thinking most of these deals, if they have some level of value add to them, they kind of start off a little bit lower in year 1 and 2, and they kind of escalate up as you implement the rent increases on new leases and on renewals as well. So kind of really talking about that, and then the rest of it's really just kind of about the deal and the management team. So you make sure they have a good bio on any of the principals in the deal. If you're a little bit newer in the business or even your first time, team, as we talked about in many of the previous podcasts, team's important in these deals. So a lot of the resume can be borrowed from either a potential co-sponsor you might have in the deal and or the management company that you hire, or your mortgage broker like Old Capital. Those are people on your team. Kind of borrow their experience and kind of transfer of credibility by having a more experienced team member on your team. Those are things to talk about, as well as making sure you understand the submarket. Make sure you understand like where you're buying, what's going on in the local area, as well as like your rent comparables. So if you're going to go in and have a business plan to go raise rents $100, it's very helpful if you can go down the street and point out, a mile away, you got 2 or 3 properties that are similar vintage, similar size, that have higher rents. You can kind of prove that out with your market rental survey. Those are all good things, as well as having some nice pretty photos in there and kind of discuss the CapEx plan in your budget. But that's kind of the basics of a business plan when you're putting it together.
So, Mike, just a real quick question concerning at what period of time do you start talking about this deal to investors on the front side of the transaction? Or if they're accredited or sophisticated, do they have to know you? Is there a PPM that has to be involved? At what period of time do you guys start talking about the deal?
Yeah, so first we really try to establish a pre-existing relationship with these people. And when we're starting out the process and getting to know somebody, we just talk in general terms, talk about our track record, things that we've done. And then the first thing I always like to do when I meet someone new is kind of go over a existing deal we've already done that's closed, that's not available for equity raise. And I'll show them a copy of an old webinar that we did when we did the equity raise, as well as an old PPM, and then let them kind of ask questions about us on that deal. We kind of qualify them a little bit, make sure that they are comfortable with us and the way we operate in the pitch. And then when it comes time for a live deal, and we already have kind of cleared that hurdle with them, and then when the time comes to actually ask for money, we just really have to kind of pitch the deal and the location. We don't really have to pitch myself to them. So that's kind of what we do. But when we're going out and raising money, really anymore now that we're a little bit more experienced, we typically wait a little bit longer in the deal before we put it together. And we try to have the PPM and the business plan fully complete. This is the first time I put the actual specifics of a deal in front of them. Sometimes we'll do like a little teaser a week or two ahead of like a webinar call to try to do a capital raise, where we'll have some photos and some basic facts and on the property and location, but we don't really get super specific on the financials. And then we never really get anyone too excited until we have the property formally tied up. I know other people try to kind of get out ahead of it a little bit earlier, especially the less experienced people, but we always fear of someone coming in trying to snake my deal from me before I have it fully tied up. So call me a little paranoid, but that's what we do.
All right, Mr. Mike Becker, Mr. Paranoid himself. Anything else we should be talking about, Mike?
That's it, really. We definitely appreciate all the good feedback we've got. We've got a lot of good questions. So if you just go to the oldcapitalpodcast.com, we updated our website here recently. You can go in, and if anyone hasn't got the sample due diligence checklist or the Old Capital white paper talking about kind of the basics of multifamily finance, you can find it at oldcapitalpodcast.com. Also, we would certainly appreciate if anyone would leave us a rating and review on iTunes or Stitcher or one of the other podcast aggregators. It really helps us get better rankings and better visibility, which help us attract better guests for the interviews.
Sounds great. Mike, thanks for hanging out with us in the Old Capital Ask Mike Mondays. I'm Paul Peebles. Have a good day.